Tax evasion is a global challenge. It undermines government revenue and erodes public trust. Countries around the world are constantly seeking effective tools to combat this issue. In Indonesia, a nation grappling with a complex tax landscape, one tool has emerged as a powerful weapon against tax evasion: Ismuhadi's equation. This equation, also known as the tax accounting equation, offers a unique approach to detecting financial discrepancies and uncovering hidden economic activities. This essay delves into the intricacies of Ismuhadi's equation and its significance in the Indonesian context. We will explore its derivation, the logic behind its application, and its effectiveness in identifying suspicious financial patterns. Moreover, we will examine real-world examples of how this equation has been employed to combat tax evasion, particularly in sectors such as natural resources. Finally, we will acknowledge the limitations of the equation and emphasize the importance of utilizing it in conjunction with other investigative techniques to strengthen tax enforcement efforts in Indonesia. Ismuhadi's equation, named after Indonesian tax expert Joko Ismuhadi Srewosono, is rooted in the fundamental accounting equation. The traditional accounting equation states that assets are equal to liabilities plus equity. Ismuhadi's equation, however, rearranges this equation to focus on revenues and liabilities, resulting in the following formula: revenues equal expenses plus assets minus liabilities. This seemingly simple rearrangement has profound implications for tax enforcement. By isolating revenues on one side of the equation, Ismuhadi's equation allows tax authorities to scrutinize the relationship between a company's income and its liabilities, revealing potential discrepancies that could indicate tax evasion. The power of Ismuhadi's equation lies in its ability to exploit the inherent inverse relationship between revenues and liabilities. In a typical business scenario, as revenues increase, liabilities tend to decrease. This is because businesses often use a portion of their earnings to pay down debts, thereby reducing their overall liabilities. Conversely, a significant increase in liabilities without a corresponding increase in reported revenue raises a red flag. This pattern suggests that a company may be underreporting its income and manipulating its liabilities to evade taxes. Ismuhadi's equation provides a framework for identifying these suspicious patterns. By analyzing financial statements through the lens of this equation, tax authorities can quickly pinpoint companies that exhibit these warning signs, allowing them to focus their investigative efforts on potential tax evaders. Ismuhadi's equation serves as a powerful tool for detecting anomalies in financial statements that could indicate tax evasion. One of the key red flags that the equation helps identify is a significant increase in liabilities without a corresponding increase in reported revenue. This pattern suggests that a company may be artificially inflating its liabilities to reduce its taxable income. For example, a company might overstate its debts to suppliers or create fictitious loans to related parties. These actions would increase the liabilities side of the equation without a genuine increase in expenses, thereby reducing the reported revenue and consequently the tax liability. Another red flag is a sudden decrease in assets without a corresponding decrease in liabilities or an increase in expenses. This pattern could indicate that a company is hiding assets or underreporting income. For instance, a company might transfer assets to offshore accounts or undervalue its inventory to lower its taxable assets, thereby reducing its reported revenue. Section 5, the Indonesian context, a breeding ground for evasion. The Indonesian economy, while vibrant and growing, presents a unique set of challenges for tax authorities. Tax evasion is a persistent issue, fueled by a combination of factors including a complex tax system, a large informal economy, and a history of weak enforcement. Indonesia's complex business structures, often characterized by intricate ownership networks and opaque transactions, provide ample opportunities for tax avoidance and evasion. The informal economy, a significant portion of Indonesia's economic activity, poses further challenges as transactions within this sector are often unrecorded, making it difficult to track income and ensure tax compliance. Ismuhadi's equation emerges as a valuable tool in this context. Its ability to detect discrepancies in financial statements, even within complex business structures, makes it particularly relevant to the Indonesian landscape. By identifying suspicious financial patterns, the equation assists tax authorities in narrowing down their focus and targeting companies that warrant further investigation. This targeted approach is crucial in a country like Indonesia, where resources for tax enforcement are often limited. Section 6: Real-world applications, shining a light on hidden transactions. While specific cases involving Ismuhadi's equation are not publicly disclosed to protect the integrity of ongoing investigations and taxpayer confidentiality, the Indonesian tax authorities have employed this tool in various sectors, particularly those susceptible to tax evasion, such as natural resources. The natural resources sector, including industries like mining, forestry, and plantation agriculture, often involves complex supply chains, opaque pricing mechanisms, and a high degree of cross-border transactions. These factors make it challenging to track income and expenses accurately, creating opportunities for tax evasion. Ismuhadi's equation provides a framework for analyzing financial data within this sector, helping tax authorities identify companies that might be underreporting revenue or inflating expenses. By scrutinizing the relationship between revenues, expenses, assets, and liabilities, the equation can uncover discrepancies that warrant further investigation. Section 7: Beyond the equation, a multifaceted approach to tax enforcement. While Ismuhadi's equation is a powerful tool for detecting tax evasion, it is essential to recognize its limitations. The equation is most effective when used as part of a broader, multifaceted approach to tax enforcement. This approach should encompass other investigative techniques, data analysis, and intelligence gathering to build comprehensive cases against tax evaders. Tax authorities can enhance the effectiveness of Ismuhadi's equation by utilizing advanced data analytics techniques to analyze large data sets and identify patterns and anomalies that might indicate tax evasion. Collaborating with other government agencies and international partners to share information and intelligence on tax evaders. Establishing robust whistleblower programs to encourage individuals with knowledge of tax evasion to come forward. Conducting public awareness campaigns to educate taxpayers about their obligations and the consequences of tax evasion. Section 8: The future of tax enforcement in Indonesia. Indonesia has made significant strides in recent years to strengthen its tax enforcement efforts. The government has implemented various reforms, including the introduction of a tax amnesty program and the strengthening of the Directorate General of Taxes. These efforts have resulted in increased tax revenue collection and improved tax compliance. However, challenges remain, and the fight against tax evasion requires ongoing vigilance and innovation. Ismuhadi's equation, as part of a comprehensive tax enforcement strategy, can continue to play a vital role in Indonesia's journey toward a fairer and more transparent tax system. By leveraging the power of this equation alongside other investigative tools, data analytics, and international cooperation, Indonesia can create a more level playing field for all taxpayers and secure the resources necessary to support sustainable economic growth and development. Section 9: Conclusion towards a fairer tax system. Ismuhadi's equation has emerged as a valuable tool for combating tax evasion in Indonesia. Its simple yet powerful logic, rooted in the fundamental accounting equation, allows tax authorities to identify suspicious financial patterns and uncover hidden economic activities. While the equation is not a silver bullet, it serves as a crucial component of a comprehensive tax enforcement strategy. By embracing this tool, along with other investigative techniques, data analysis, and international cooperation, Indonesia can continue to strengthen its tax system, ensure a fairer distribution of the tax burden, and secure the resources needed to support its development goals. The fight against tax evasion is an ongoing battle, but with innovative approaches like Ismuhadi's equation, Indonesia can move closer to a future where everyone pays their fair share and contributes to a more just and prosperous society.